Hello, welcome to my channel today. This is a King's Tutor. Okay, it's the first time of joining us. Kindly like, comment, and share and subscribe to our channel. And if you're a returning subscriber, thank you very much. Okay, now we want to see the difference between provisions and reserve. Now, this is a different series in this channel. Okay, we're going to be looking at the difference between given terms. Okay, that are correlated in the accounting endeavors. Okay, so if you want a difference between different terms, just comment in the video below the aspects that you want. Okay, so we'll continue on this for as long as possible. Okay, so we want to see the difference between provisions and reserve. Okay, now what is provision? Now, provision is a part of profit that is set aside for a specific purpose. Okay, provision is a part of profit. That is when an organization makes profit. The part that is kept aside to meet a specific purpose, we call that what? Provisions. Okay, so that is why in while we treat accounting and finance terms, you'll see something like provisions for bad debt, bad and doubtful debt. You see something like provisions for depreciation. Okay, so you see provision for unrealized profit, and so on and so forth. So what does it mean? It means that from part of the profit we'll make, we are keeping a specified amount of money should in case most of these things occurs. Okay, because these are items or expenses that we don't have their actual rate or actual amount of the expenses. Okay, so we'll keep a specified money or we'll keep a range of amount so that should in case this occur. For instance, for bad debt. Now, what is bad debt? It means what? Irrecoverable debt. Okay, debt that cannot be recovered. Now, how does this come about? When you make sales to your customers on credit. Okay, it's obvious that you have to sell on credit because to have increase turnover. So we might not know what might happen to the debtors. Okay, some of the reasons for bad debt is insanity of the debtor, disappearance of the debtor without trace, death of the debtor. These are some of the things we cannot control. So once it happens, we have to set aside some part of money from our profit in order to meet this specific purpose. Also, depreciation is reduction in the value of an asset. Okay, as a result of wear and tear. So from the useful life of that asset, we are going to remove it from the profit, charging against the profit a specified amount. So when it gets to the useful life, we sell that asset as a scrap, take the money and add to the fund we have been keeping to use to get a new one. Okay, so you see, provisions are part of profit set aside to meet a specific purpose, to make expenses in which its actual amounts cannot be gotten from actual calculation. Okay, so we just make estimates. So that is provisions. Now, what is reserve? Also, reserve is another aspect in which fund is removed from the profit. But in this aspect now, it is not to meet any liability, but as prudent measures in retaining assets in the business. Okay, so reserve are part of profit set aside not to meet any known liability, but as prudent measures in strengthening the business. Okay, the same way provisions are kept aside from profits to make a specified purpose, reserve is kept aside not to meet a specified purpose as per se, but to strengthen the business, standing as as a prudent measures. Okay, so we have different types of reserve. In some texts, we have the capital reserve, and we have the revenue reserve. But I made a research and I found that we also have what we call a secret reserve. Okay? Now, what is capital reserve? Now, capital reserve is a type of reserve in which funds are gotten from the reserve or part of the profit, not to be distributed as dividend to the shareholders. Okay, we already know that once a company makes a profit at the end of the year, definitely they are going to share, distribute to the shareholders as what dividend, as regards to what the capital they invested in terms of their shares. Okay, so the capital reserve are money that's what kept aside, not to be distributed as what dividends to what shareholders. Okay, so most of the money that is kept in this are from what we call the capital profits. Okay, they are not in the ordinary business of that firm. Okay, like as regards probably their trading activity. No. Okay, so most of the reserve or most of the funds kept in the capital reserve might be profit from revaluation of their assets, or profit from redemption, or premium from shares issued. Okay, this is not part of the normal trading activities of what the business. So the capital reserve, a reserve that is kept aside, not to be what distributed as dividend to the shareholders. Okay, so now the revenue reserve is the reserve that is what available to be distributed as what to be distributed to the shareholders as dividend. Remember, this is not to be distributed as what dividend. As dividend. Why this is what distributed as dividend to the what? To the shareholders. Now, this is divided into two also. We have what we call the general reserve, and we have what we call specific reserve. General reserve and what? Specific reserve. Now, before we come into this, let's see what secret reserve means. Now, secret reserve is that money kept aside, not known to the members. Okay, so there are some firms in which it is not good for them to publish in a financial statement losses. Okay, because of the public confidence that have been deposited in such firm. For instance, bank. If a bank would publish in a financial statement loss, it will cause chaos. Okay, so some part of the money that are part of profits they made for recent years, for previous years, they keep it aside as secret reserve. Okay, so should in case there is a loss in a particular year, what they will do is to ensure that most of those funds they use to write off some of this loss, to portray to the public a reasonable financial statement. Okay, to retain their public confidence. Okay, most of this reserve is not known by the members. Okay, so the secret reserve is that part that is kept aside in order to retain the public confidence they have in a particular the firm. Okay, so in case they have a loss, most of this might arise when there's an high expenses as regards depreciation, when they want to write off high expenses as regards depreciation and other expenses that are abnormal. Okay, so they will have to get the fund there to replace that, so that they will portray a good financial statement. Okay, now getting back to the revenue reserve, said divided into general and specific. Okay, now the general reserve is that money which is also, the general reserve is also known as contingency reserve. Now it is a reserve that is used in strengthening the financial position of the business, to strengthen the business. Okay, the general reserve. Why the specific reserve is meant for a specific purpose. Now this is the aspect that looks like the provisions, but it is different in a sense that the specific reserve, for instance, if it is meant to ensure, for example, dividend equalizer. For instance, if a particular firm pays dividend each year, okay, to their shareholders, and probably in a particular year they have a loss, and they want to pay that specific amount to the shareholders as dividend. In other words, not to ensure that the public sees their flaws. And what they do is to ensure that they keep reserve in this aspect. So when there is loss or when there is reduction in profit, in the sense that they might not be able to pay what they were paying before, they will have to what? To ensure they get funds to there to equalize to what? That dividend. Okay? So when that happens, most of the money here we pay to what we call a dividend equalizer fund. Okay? To pay to the what? To the shareholders. Okay? So this is the difference between the provisions and the reserve. We say the provisions are part of profit that is what kept aside for specific purpose. That is why we have provisions for bad debt, provision for depreciation, provision for unrealized profit, provision for discount allowed, provision for discount received. Okay, these are kept aside for those purposes. Why the reserve are not kept is part of profit kept aside not to meet any liability, but as prudent measure in what strengthening what a business. Outside it can be seen as it can be divided into capital and revenue in some texts, but I researched and found out that we also have what secret reserve. Okay, so we say the capital reserve is that is not distributed as dividend to shareholders, while revenue is that is distributed as what dividend to shareholders, which can be divided into general or specific what reserve. Okay. Also, some of the difference between provisions and reserve is that provision is a charge against profit, while reserve is what an appropriation of what profit. Okay. Now, provision also is meant for what a known liability, while reserve is kept aside not to meet any what known liability. Okay. So also some provision is diminution on what the asset. Okay, why reserve is part of undistributed profits made in a business. Okay, so that is our provisional and reserve. Okay, in the next video we're going to see other aspects of differences in two related terms that is what mostly used. Okay, if you want anyone, just comment below the different aspect of the difference and we'll deal with that. Thank you very much. If this is the first time, kindly like, comment, share, and subscribe to our channel. Thank you very much.